brains behind the Women Teach Forex movement, the creator of our now beloved BYOB cash out strategy, a coach and mentor of the BYOB movement. We call her the Trade Whisperer. Ladies and gentlemen, I introduce to you Miss Tasha M. Dyer. Miss Dyer, are you on the call?
Yes, I am here. And thank you so very much, Mr. Love Phillips. Ladies and gentlemen, if you have not had the pleasure of hearing from Mr. Phillips, there's definitely someone you want to make sure you are in his presence if you are ever at one of our expos, Be Your Own Bank expos. The information he delivers is powerful. He is very instrumental in the Be Your Own Bank movement. So with that being said, I just want to welcome everyone to the call, BYOB Worldwide. I am excited this evening. I am truly excited this evening. So tonight, we are talking about support and resistance lines, and I am trying to share my screen with you. This is part 2 of a training that we started. This is part 2 of a training that was started, and we want to help you maximize your trading opportunities. Tonight is a training night. What we are here to do is to help you understand how you can think like a bank, act like a bank, so you can become your own bank. And it looks like I'm gonna change my browser. Give me a moment, because it should be the web analyzer on here for some reason is not sharing this information with you all that runs on a tab on the side. So I'm gonna change my browser. So I'm gonna change my share. Give me 1 second. Let me change that share for you. Do it this way. It says click the check marks on and off. I don't know what it is. It's been having an issue with that one. See how it pulls right up on Safari? So we're just gonna go with Safari tonight. So welcome everyone to the call. Now, as we get started this evening, then what I want to do is I want to help everyone on the call understand exactly what the BYOB cash out is. What is the BYOB cash out strategy? So if this is your first time on the call this evening, let me get a 111 in the chat. If this is your first time on the call, let me get a 111 in the chat. Let me welcome each and every last one of you all. Now, if you had the opportunity to be with us on any other session and you had the opportunity to cash out, let me get a 555 in the chat. Let me get a 555 in the chat if you've been cashing out with us. Oh, well, awesome. I'm excited about that. So what we're here to do with Be Your Own Bank is honestly to talk to you and to help you. It's about reaching 1 million families. 1 million families with the BYOB movement. 1 million families financially educated. That means you're going to be educated and empowered. And this is going to happen by the 28th of March, 2021. So, and that begins with you. 1 million families begins with you. Ladies and gentlemen, it begins with you. So, what is the BYOB cash out? It is a strategy that I created that literally uses 3 indicators. It uses 3 indicators. So 3 confirmations, 3 indicators. Understand, I like clean charts. If you overuse indicators, what happens is you miss trades, you miss things because indicators are lagging. Most indicators are lagging, which means that they're utilizing the charts, they're utilizing the movement from the charts to actually understand the trade, right? So we understand that most indicators are lagging. And so what we're looking for is to understand is how do we trade this? How do we trade the BYOB cash out? What is the BYOB cash out? Well, first and foremost, when you start trading, what you're looking for is something called an area of value and an entry trigger. The entry trigger is how you enter the trade. That's the entry trigger. Now understand that an entry trigger literally is just about, we need movement. We need movement in the chart. We need movement. And when we get movement, what happens is I can buy the market, I can sell the market. See, I can buy or I can sell the market with movement. I'm buying one currency and selling the other. So when you have a currency pair, you have what's called your base currency and your counter currency. Your base currency and your counter currency. Now, if I'm going to buy the market, that means my base currency, which is the first currency, is the strongest. If I'm selling the market, my counter currency, which is the second currency, is the strongest. So that's where you want to begin. You want to understand, we're riding a wave. See, the wave of the market, people move the market. The market, the banks, insurance companies, financial institutions, all of those, they move the market. We don't move the market. So when you understand that you ride the wave of the market and you understand what the market is doing, then you understand how to put yourself in profit. You understand how you can maximize and how you come out on top. Because we're here to get in and get out. It is $5.3 trillion a day being traded, over 11 trillion with cryptocurrency. So how do you maximize and how do you take part in that? And that's where this strategy, you know, why I wanted a strategy, why I looked to create a strategy, and where all this came from. So with understanding that if I had to do this by myself, if I had to do it all alone or by myself, then what I would be looking for is I would have to use those areas of values, which are support and resistance lines, which is the trend lines, which is the moving averages. Those things, those are my areas of value. And what I'm looking for is, I'm looking for the web analyzer to capture that. I'm looking for a web analyzer to capture that. So the web analyzer takes the heavy lifting out, so I don't have to follow a particular currency pair. I can follow multiple, because what the web analyzer does is it pulls those currency pairs. That's what it does. It pulls them for me. And then I, in turn, look at that call price, which is an entry trigger, and I can align it up with what the web analyzer is calling, and I can apply my 3 confirmations. Now, I'm going to tell you, you have multiple trade opportunities. So the web analyzer might call for a buy or a sell. It might be going in opposite direction. The reason for that is because with the BYOB cash out, you have the opportunity to actually get more trade opportunities. So it could be calling it in a correction. It could be calling it in the way the market is going at the time. It could be calling it, but you have the opportunity to cap multiple trade opportunities. And just looking at this screen right here, we actually have the opportunity. I mean, you look at this, right? Here's opportunity right here where I literally had 2 trade opportunities. Now, looking at what the web analyzer might have called, I might not have had, you know, if I just based it on what the web analyzer was doing, then I have maybe 1 trade opportunity. But just looking at what the web analyzer is calling, based on this just right here, I actually have 2 trade opportunities, right? So I appreciate the currency pair dropped in the chat. Tonight is based on training. We're going to do more training, but I can utilize that one to analyze what we're talking about tonight as I go through this information. So greatly appreciate it. Tuesday night calls are geared toward training. So now when we're looking, the first thing that I want to look at, the very first thing I want to see is the stochastic, right? It's the stochastic. So understanding what the stochastic is we're looking at the blue line crossing over the red, and with the blue line crossing over the red and around that 20, my momentum starting around that 20, I'm looking for a buy. With the blue line crossing over the red around the 80, I'm looking for a sell. So that's the first thing first that I'm looking for. The very first thing that I hone in on, whether I type the currency pair in myself or whether I utilize the calls from the web analyzer, the first thing I want to look at is the stochastic. What is it doing? So If I'm trading right here, if I would have, now this is not real time. This is actually real time, right? This one is real time. What I'm looking for, and this is to give you the example and to help you understand what we're looking for. So this would have been real time like this is right here. So looking at this, when we begin to see this move, what I'm looking for is I now understand that I have my stochastic, or momentum is starting. It measures momentum. And the momentum is starting around the 20 and it pushes up. And when I see that beginning to happen, like what you see right here, now this is not starting around the 20. Understand, this is not a trade we would even go any further with, because the momentum needs to start close enough to the 20. You see, this trade was coming out of consolidation, but I wanted you to see what a real-time indicator and a stochastic would actually look like. So this one actually started around the 20. And as it began to push up, right, the next thing I'm doing is I'm looking for a green flat bottom Hikinashi candle, right? That's what I'm looking for. Now, when you see that we first look, we see we got a red candle. You see where my line is on top of that. When we see the momentum started, I have a candle that's red. It's got a wick on the top and the bottom. So that means I'm there for a setup. That means I'm there. This is the beginning of what I'm looking for. So when I see that, what I'm looking, so that tells me that it's a watch. It's a watch list. It tells me that I'm getting ready for it. So now I'm looking for this green candle. My green candle forms. Green candle with a flat bottom. Now, I see this question a lot. How do I know when do I enter the trade? Hikinashi candles are trend candles. These are also indicators, right? They're also indicators. And because they're indicators, they form solid as a trend. They form solid as a candle. The most I wait is maybe a minute or two, because sometimes, like this candle, when it first began to form, what do you see? You see it has a nice wick that's popped out of the top. So even, for example, this candle, right? This one might have began with a flat bottom, but you see it has a wick that's popped out of the bottom. I need a flat bottom candle. So the most the wick might pop out is within the first minute or so. Other than that, you have a solid candle. The only other movement that candle really makes after that is to push up or down just a little bit. But they form, if it's weak, it's going to be a small body little candle like this one. If it's strong, you see you have a strong body candle like these, right? Like this one formed a strong body candle. And that's how they form straight out. That, like, as I'm talking, we got 2 minutes left before the next candle. Watch how this candle forms. So I do want to address that. Watch how this candle forms in the next 2 minutes. So now this actually moves up. And now understand that what I'm looking for is I'm looking at these candles. This candles, if they look like steps, right? That means that they are getting stronger. That has still in a strong trend. So it's not really the pips. You just kind of look at the candle. It's not really pips that I'm looking for in a candle to consider it strong. I mean, just look at the difference in these candles. These candles form, look at the body, nice fat body on the candle. And then now look at these. These are weak. These are small body candles, right? So that's really what you're looking at. I'm not measuring the candle as far as, okay, this candle got this many pips. I'm just looking at the candles. So, no, I've never measured it and said, okay, this is how many pips it needs to be. You can just look at the strength of that candle. So, and watch how the next one forms on this one. We got about a minute now. So watch how the next one forms. Oh, you're welcome. So now also, so what happened is I actually rolled this. I could ride this candle up, right? I can ride it up. So here it is, moving up, and this actually covered 32 pips. That covered a 32 pip movement, right? 32 pips. Now, here is what we're looking for, and we got to the top. And now there are multiple opportunities. Whereas if it's in a range like this or something, it's multiple opportunities where you can trade up, down, buy, sell, buy, sell. ride it. That's right, CC, ride it up and down. And in this case, what you see is you had the opportunity to in turn, it lined up. My stochastic crossed over the blue around the 80. And then what you see is I have my red candle that formed with a flat top. So notice also, right here, when this candle flipped, I was no longer at the 80, right? It was no longer at the 80. My momentum started. I don't want it to stay at the 80. I don't want it to stay at the 80. And then my PSR flipped. So now I got 3 confirmations. I have to have all 3 confirmations. Do not take the trade without all 3 confirmations. So now I got all 3 confirmations, but look where I'm at. I'm not at around that 80 anymore. We want the momentum to push forward. We want the momentum to continue. That is what we're looking for. Okay, look, the candle formed, right? Look how that candle formed. That candle just formed. So do you see how solid that candle is? That's what you're looking for. Those candles, Hikinashi candles form solid. They form solid. So in this situation, we had the opportunity to ride this up, and then we turn around and rolled it down. And then both of them covered over 30 pips. Now, that's opportunity for you to gain. The official calls are 10 pips and cash out, right? That's the official call. However, right? However, that's the official call, but guess what? With this official call, right, you have to remember you have something called a pip reaction time. I call it your pip reaction time. So I'm gonna draw this line on here, right? I'm gonna draw this line on here. That's where the trade became effective, right? That's where it became effective. You have to think about from the time you see this to the time you grab your phone or your computer and the time you hit market execution, right? There are different ways to enter a trade. If you're on this 15-minute chart, it's market execution. So from that time to the time you enter the trade, it might be up here somewhere, right? Let's drop another line. It might be up here somewhere. You know, what's your pip reaction time? So when we're saying that, oh, I'm covering, that's 10 pips. So when we're saying, okay, it's a 10 pip, right? You grab 10 pips. The reason why, if you're on my training calls, or the reason why you see me also analyze the trend is because we're at a 92% accuracy, 92% accuracy on 92% accuracy on just following the 3 confirmations and get it, right? No, I would not have taken that trade. I would not have taken that trade that we're looking at on the end because of where the momentum started. I would not have gotten into that trade because of where the momentum started. So that is about you got a 50-50 chance. You don't know what the overall market is doing. And what the overall market is doing is very, very important. So you don't know. So that's a 50-50 chance. You're lowering your accuracy rate by taking a trade when it starts in the middle. That's what you're lowering. So can I take the trade when a PSR, the first dot is formed? Yes, no, you take the first one. So the first 3 confirmations, So first 3 confirmations. So right here is where I had all 3 confirmations. And now I could take the trade and ride it for 10 pips. So I'm moving forward. And so now what happens is I want to make sure that I'm covered. So now that's another 20 pips. So you can grab your 10 pips and cash out, right? You can definitely grab your 10 pips and cash out. No. I wouldn't get in this until the 5th candle according to the rules. No, I get into it on the first candle with all 3 confirmations. So, for example, I have 1 confirmation right here. That's 1. And then I move here and now I have 2. I have my candle, right? And then, but I don't have my PSR flip until about here, right? So you want all 3 confirmations. You want all 3 confirmations before you get in there. So yes, you will need all 3 confirmations before you enter the trade. And we still have enough pip movement to cover what we're looking for because we've seen it on these calls it can turn around. It can definitely turn around. So now, with that being said, this is where we are covering. So you can ride this up and ride this down for pip movement. So now what we're looking at tonight is how do I trade the higher time frames? Let me see. What if the candle's already formed? The candles form solid like we just watched. The candles form solid like we just watched. So you definitely want to make sure you're looking at, you definitely want to make sure that you follow all three confirmations. No, they are not going to be simultaneously. They will happen. As you can see, we had one, then we had two, and then a few candles later, we had three, right? So that is how they form. That's how they form. So that's when you know it's a valid trade to enter. So that's the example of what we're looking for. What I get in this? No, now the official call is 10 pips. That's the official call. Until you learn, my recommendation, if you are just starting to trade, if you're just looking, whatever it is that you're doing, my recommendation is that you actually learn on a 15-minute chart. You start with the 15-minute chart and you start with your 10 pips and you cash out. That's why this is the BYOB cash out. So you definitely want to start there. You definitely want to start there. So if you get a flat candle and a PCR flips on the second or third candle, yes, so it doesn't matter how they come in, but the one that matters that needs to be first is the stochastic. The stochastic needs to be first. That's number one. The stochastic needs to be first. And then typically you're going to get that candle, the flat candle first. But yes, sometimes you can get a candle with a wick on it and a PCR flip first, and then you get a flat candle. But most of the time it's going to look like it does right now. That's how it's going to look. So now where we are right now, what we're looking for tonight is how do I take trade this higher.
We got another question. I want to make sure that they get the question answered clearly. I think the question was, on the 10 pips, can you take the next trade if all the confirmations line up? That was the question.
Can we take the next trade? Once all the
if you have that question, wait, hold on a second. Whoever asked that question, just unmute yourself, because we want to be clear that we get your question answered. So unmute yourself, because we want to make sure we get your question answered.
What I was asking was, okay, so you see at the blue at the bottom when you were saying you got the confirmation. If I got the trade and 3 candles were formed, how do I know that it's okay to continue going, like that trend is still going in the same way, that it didn't reverse? Like, so 3 candles already formed, they're flat bottom, so that I'm just looking at it, and sometimes it looks like it's going to form the right way, but the color may change, but everything lines up, but the candle is a different color. Does that make sense?
Situation, the candle's not a different color. We have confirmation 1, and then we had confirmation 2, and once confirmation 3 hits, which is its PSAR, now we can enter the trade as market execution. So now once you get all 3 confirmations, you enter the trade. And what you have to do to get that comfortability and that confirmation that you know you're doing the right thing is practice this in your demo account. My recommendation is to go through them, practice several of them, but do it in your demo account. And that way you definitely, now the pie chart is not an official 4th confirmation. What you see me doing with the pie chart is adding 2. You can look at this and tell that it's a valid trade. But when I see a trend, we see things that look like they're trending, you'll see me pull out that pie chart. I don't do it on every trade. So there are 3 official confirmations. 3 official confirmations, get your 10 pips and cash out. Without doing anything else other than these 3 confirmations, then that is where you can have a 92% accuracy rate. To increase your accuracy rate is when I add other things, like the looking at the trend and that type of thing. But we're at a 92% accuracy rate, looking at just what we're looking at right now.
Just to add to that, keep in mind, ladies and gentlemen, the Hikinashi candle is a trend indicator itself. So if you have a strong trend that is in a sell position, a buy position, it is going to change. That's what the PSAR, it lets you indicate that it's going to reverse. So the Hikinashi candle is telling you that it's in the uptrend or a downtrend. That's why that's the importance of understanding the 3 confirmations. And as we're about to get into here now, when you get into the higher time frames, this is going to give you the ability to confirm the strength of the trend. The Hikinashi candle already tells you it's an uptrend or a downtrend, and then your longer time frames confirms the strength of the trend. So I just want to make sure everyone was clear regarding that.
Okay, so now that is the 3 rules. Those are the 3 confirmations. And so just once again, we have the stochastic that measures momentum. I have the Hikinashi candles that measure trend. And then I have the PSAR, which is a parabolic stop and reverse. That is like that is a support and resistance. That's a reversal. It shows reversal in the market. So just imagine you have a support and resistance that move with it. Once you get all 3 confirmations, then what you have to do and what has to happen is you can enter the trade on market execution. You enter the trade. 10 pips for your take profit, 10 pips and cash out. And then what you want to do is you want to make sure that you put your stop loss. We trade with the stop loss. The recommended stop loss is for a buy below the PSAR, because you have to take into account the market correction, the market, all of that. And then at the top for a sell, it's above the PSAR. Those are your 3 confirmations. But what we're training on tonight, right? And so what you want to do is you actually want to take that and you want to take that and you want to practice in your demo account. And so where we're headed tonight is the higher time frames. We want to look at support and resistance lines, right? We want to be able to look at support and resistance lines. What are support and resistance lines? The support lines is the level where the price is expected to pause. So a resistance line is going to pause. So if I'm looking for support and resistance lines, I'm on a higher time frame right now. And so I want to go to the higher time frames to be able to identify these support and resistance lines. And I might even on a good one, let's pick a different currency pair. So what I'm looking for is I'm looking for support and resistance lines in the market. And what those are actual entry points and exit points. That's what you're looking for, entry points and exit points. So what happens at those points is the market always breaks through. The market is going to pause or break through at that point. And so that's what we are actually looking for, is those support and resistance lines. Now, how do you identify those? What am I looking for? Always understand you can always look left. I can always look left and see what's going to happen. How do I know, looking at this blank space right here, what's going to happen? Where is the market going to pause? Where is it going to stop? I can tell by looking left. I can tell because the market repeats itself. I can tell because the market actually talks to you, right? The market, it says different things to you. And so you want to understand, you want to start listening to the market, because the market is going to talk to you, right? It is. So right here, it looks like we got a trend, a little trend, downtrend. And so I'm on a higher time frame right now. So how do I identify these points? How do I do that? first things first, right? Because we want to know, how do I trade the higher time frames? How do I take the BYOB cash out? See, understand, it works on everything. It works on a foreign exchange, it works on crypto, indices, and it works on metals. So, but I want to make sure I get those valid support and resistance lines for my take profits. How we've been asked, how do we trade the US 30? How do we trade higher time frames? How do we capture more pips? How do we do it? And now understand, if you're just starting, if you're just learning to trade, I'm going to recommend that you stick to the 15-minute chart and cash out. That's what it's designed for. Understand the BYOB cash out. Understand cash out. Understand what the cash out strategy is. So you want to understand that it's designed for you to be able to take profit, get in and out of the market and take profit. That's what it's designed to do. Now, but as you increase your trading and increase that level, now what I do to make it clear to identify is I actually change to the line chart. Change to the line chart. Now, when you change to the line chart, you can actually begin to see like these little choke points, right? These little places where the market paused. And I need a few touches, okay? I'm looking for a few touches. Now understand that this is an art, it's not a science. So it's not gonna be dead on. And also understand that there's zones. So the lines that I draw might not be the lines you draw, but they might be in a vicinity. But understand, like, this is a zone. So even though I have my touches right here, but look where the market kind of got choked up just a little bit. So honestly, it's like a zone from here to here. This is like a zone, right? I also have a zone like right up in this area, right? So it's like a little zone. So understand that it's not gonna be dead on, it's not gonna be dead on that line, but it's like a zone, right? And so what I'm looking for, and if I move left, which I'm gonna come up a little bit because I want you to see it because of where we are and what we're looking for, right? I want you to be able to see it, is these lines. So I'm gonna put some up here too, because I just want you to be able to see how it goes. The market repeats itself. It definitely repeats itself. Now I don't want to oversaturate my chart with lines. Like, I don't need a line everywhere. I don't need lines all over the place. Now understand, right now I'm on a 4-hour chart. So we might have, just when I spread this out, you'll see how it looks, right? But I don't want to put lines all over the chart. You can overdo it, right? But by putting those lines on the chart, and that was in a trend, so it might be a minute before it actually pulls back down. That's why I wanted to do some on the top as well. Might have to go to another chart. But if I come left, right, when we get movement there, because I can guarantee you, when we come up to where the market moved from, if I drop some up here, right, if I drop some lines up here in these support and resistance zones, okay, then if I go to the left, oh, this was a nice trend. But if I move to the left, look what happens, right, where it was pulling up. Now you saw me drop the lines to the right, but when I come to the left, where are the lines? Where are they? They're in that same point. They're in that same area. It's touching on the chart in the same areas. And if I come down to where my other lines are, look what happened. My support and resistance lines are in the same areas. Look how that works. So when we say listen to the market, and we say the market talks to you, and the market repeats itself, wonder why it always gets stuck at these little choke points, at these little support and resistance lines. So what's gonna happen at these lines? The market is going to pause, or it's gonna break through. It's gonna stop and turn around. You see it'll test the line. It will test it, but it doesn't always make it through, right? It's going to test it, but it doesn't always make it through. So here we go, we test it and it doesn't always make it through. So when these things happen, right? When these things happen, we know this is how you identify take profit 1 and take profit 2. This is how you identify where the market is moving to. This is how you identify what is actually happening, right? So I like the line because you can actually see the open and close, like you don't see the full candle. And then what I do is I just change it back to my Hikanashi candles. I like Hikanashi candles. So you take it back to the Hikanashi candles. And what do you see? within that range, right? Because remember, I'm on a higher time frame right now. Within that, you see, what is the market doing? It's bouncing back, and it look like it gets stuck at these points. It gets stuck. So, and it pushes through and it gets stuck. Now, if you also notice, as you're paying attention, when I have nice force on my candle, look what it does. It breaks through. It breaks through, right? And when you start seeing like these candles with these wicks on the end and they look like they turning around, what's happening? It's on that zone. It's at that support and resistance zone. And it's not able to push out. It's not able to push through it, but it keeps coming back. It's testing it. It's testing it. It broke up. It came back. It's testing it, right? It's testing that line. It's testing it. It's testing it. It goes up. It's testing the line. It comes back. So it's testing, and now it breaks through. And so even after the breakthrough, it comes back and it retests the line. So at one point it was a support line, and now it becomes a resistance line, but it's testing that line, and it comes back and it's testing that line again. And so that's what you're going to continually see. So if I go down a time frame, I have the exact same thing, right? If I go down a time frame, you're going to look at how much clearer it looks, because what do I see in those lower time frames? You know, I actually have more candles. The other candles were an hour. These are actually, 4 hours. These are actually an hour now. So these candles are actually an hour. So do I have any questions, comments, testimonies, anything on the support and resistance? And we'll go to another chart and mark up another one. But I just want to make sure right now that we're understanding support and resistance lines, because I really, want to make sure we know how to apply that to the higher time frames. So do I got any questions on these support and resistance lines? And you can even see it when I'm down on my 15-minute chart, right? How is it that we know I got to take profit 1 or take profit 2? How do I know that? Of course, when I get to the lower time frames, I'm getting there on I'm definitely getting there, but it's important to, you gotta understand the lines before you get to how you take the trade on the lines. So now you notice that on the lower time frames, I actually will have more support and resistance, right? You actually have more support and resistance. So these support and resistance were actually built on a 4-hour chart, right? And you can do the same thing on the lower time frames. You do it to make sure that you understand, you'll take profit 1 and 2. So when I'm talking about I captured 10 pips, but I want to get more than 10 pips, this is how you can help identify that for better accuracy. That's how you do it. So let's look at another one. Let's look at another one. Okay. So now what am I looking at? I'm gonna change it to my lines, right? Change it to my line. And then also you see those PSARs on there, right? Notice where the PSARs, remember I said it's like a support and resistance that kind of move with it. It's support and resistance that move with it. Look where the PSARs are. Just listen to the market. I tell you all the time, listen to the market. The market is going to talk to you. The market is going to tell you, the market is going to tell you, right? It's going to talk to you. It tells you. So the market is going to tell you, it's going to talk to you. So now look, I just put 3 of them on there, right? I put 3 and I'll drop another one. And so we're looking for those points, right? We're looking for those points. So like I said, we don't want to oversaturate it. But as I move to the left, what happened? I can always look left. I can always look left. I can always look left to see what's happening, to know what's going to happen to the right. So, and no, when I say take profit 1 and 2 and 3, I don't get out of the trade and then get back in. So it's you can do a trailing stop loss, or you can manually move and adjust your stop loss, right? That's what you can do. I don't get out and get back in. Or if you twin trade, you can do 1 to take profit 1, 1 to take profit 2. It's just a personal preference. So now you see what happened to the left, right? Those lines that I put, no matter how far over to the left I go, right? No matter how far to the left I go, what's going to happen is it's all the market. Now, yes, it moves up and down. If you've ever heard of pivot points or anything like that, you're going to see, but the market is going to stay you notice the market kind of stays within a certain range. So even when we get the news or we get something crazy that happens, the market always readjusts and it bounces back and it gets back to where it's supposed to be. So you notice that even though it goes through there, look at these little choke points. I call them choke points, but look at what they are. So look at how far left I am. I'm all the way back in June right now. So all the way back in June of this year, and it's still the same thing. So when I say listen to the market, let the market talk to you, let the market speak to you, hear what the market is saying, right? The market repeats itself. The market is consistent in being consistent in what it does. But we just have to understand, that's why I'm so big and we talk about emotionless trading all the time. You cannot be emotional when you trade. You see what's happening. So what do I know is going to happen in this blank space? In this blank space, wherever the market's going, it is definitely going to, it's going to pause, it's going to halt, or it's going to push through these points. So, you know, this is what it's looking for. So now I'm going to change back to my candles, my Hikanashi candles, right? And when I change back, look at how it actually applies. And right now I'm on the hour chart. So looking at this hour chart and looking at what I'm seeing, you know, we're looking at these support and resistance lines. This is why support and resistance lines are so important. And then look what also happens around support and resistance lines. You actually see that PSAR flip. It's a reversal in the market, right? And when I get to this point, look at my PSAR. It's a reversal in the market. So the market, look at, it's also indicating, so do I know if it's going to break through that point or not? I mean, look what's happening. My PSAR got close to the candles. When it touches my candles, I know it's going to flip, right? It touches the candles, I know it's going to flip. It touches the candles, I know it's going to flip. So I know we're not breaking through at that point. But then when I get this PSAR and I'm coming up on a support or resistance line, right? In this case, a support line. Look at that gap that I still have. Look at that gap that I still have. So I'm not, it's going to push through that breakthrough. It's going to push through that support line. Because look at the gap in the space that in the strength that I still have. Remember, these are trend candles. These are trend candles, right? And these PSARs are reversals. And they serve as, I mean, it's like a moving support and resistance line. And so it shows a reversal in the market. So with that being said, I mean, you see what we're looking for. You see that it's still pushing through. So I know I'm pushing through this one, and I know I'm pushing through this one. But then I get to the point to where I begin to touch. So I'm not pushing through another one. So what happens? My PSAR flips and it comes around. And so it's just another indicator. It's just another indication that tells you, am I going to go through that support and resistance line, or am I going to pause? You know, am I going to have a reversal? You can tell. So even with this one, where it tested the line, yeah, it tested it, but I knew it was coming back. You know, I knew it was coming back. You have to use your broker to set up trailing stop loss. So your broker is actually what sets that trailing stop loss on the computer. But you can utilize the PSAR for indication of, you know, how you want to trail it or what you're looking for, right? So you can definitely do that, or you can manually just keep moving it up on your phone. It just all depends on, you know, but once again, I'm going to always revert back to demo it, because that's how you get comfortable. And my recommendation is not to use the default one that's on your phone. Don't use the default one that's on your phone. Demo with the broker that you're going to use, because, you know, I see a lot of questions about the spreads or about different things. If you demo with the broker, because each broker has a demo platform. So if you demo with the broker, then you know how that broker is, and you can develop a relationship with that broker so you can understand how to trade effectively with that broker, right? Because each broker spreads are different. Each broker, you know, for example, when we're trading the indices, the numbers might be a little bit adjusted or the spreads might be real high. So how do I know if everybody else hit take profit one and I haven't hit it yet, or I hit it first and other people haven't hit it yet? How do I know that? I know that because of the broker I'm using. I know that because I've demoed with it and I've gotten comfortable and I tested it out, and then I can go live. I never recommend going live first. And that way, a lot of the questions that get asked, I cannot recommend a broker. You know, I can't do it. And the reason is because IML is strictly an education platform and they're not affiliated with a broker. So, you know, we just cannot do that. Yes, and you can trade crypto with this as well. You could trade everything with this. So this actually works on everything and it's effective on everything. So, I mean, this is what you're looking for. This is where we are. So on these support and resistance lines, right? And like I said, when you go down to the lower time frames, you see what you're looking for. So, and once again, your leverage. Now that is definitely a question for a talk with the finance doctor. So when he asks for the unmuted mic and he asks for questions, comments, I am going to recommend that you stay on because, and I know we have a training on it, but that's definitely a question for Dr. Bythwood, a talk with the finance doctor that happens right after this. So, oh, you're welcome. The mark, I mean, by looking at it, let's find some consolidation. I mean, this is more like a range, but one consolidation, of course, is going to be on the times. Like, you know, the market kind of slows down, you know, in the afternoons because U.S. market is the only thing that's open. The market is going to slow down about 11:30 Eastern Standard Time to about 2 o'clock in the morning. The market consolidates a lot during that time frame. So there are a lot of ways that, I mean, just by looking at it, when you start seeing a stochastic get kind of staying in the middle or, you know, not doing, you could kind of see because the momentum, is no momentum in the market. It's just kind of moving sideways. So I don't see one, but the stochastic basically is going sideways and it's not really hitting those momentum, the momentum that we're looking for. So that's what we're looking for. So that's going to be what it is. So let's see here. So that's what we're looking for. And so what we want to take next, right? I got my Hikanashi candles. Where you want to begin to go from here and where we're going to end up with a part 3 on this training is how do I trade it? Now that I can identify my support and resistance, we part 1 talked about definitely the different ways you could enter a trade with the buy stop, sell stop, buy limit, sell limit, other than market execution, right? So part 3, we're definitely going to feed into trading this. Like, how do I identify and actually take these trades? So, and one thing I can give you tonight is if this is your first time on here, the YouTube channel is BYOB Challenge, and you want to go and watch part 1. Now, what we're looking for now, this is a support and resistance line. This is very important to understand. So my recommendation over the weekend, my recommendation throughout the week is for you to go through and mark up some charts. Start getting a feel for it. Get a feel for support and resistance lines. If you have not done it, go get a feel for support and resistance lines. You definitely want to be able to identify them. You'll start being able to capture them with your eyesight without even having to go mark up the charts. So, but you still want to mark up the charts. But you'll be able to just be able to identify these things. You'll be able to start seeing these things. And then when we come to take these trades, so for example, you see we have some trades, right? And one thing I definitely want to highlight when we're looking at that is if I'm looking to take a trade, right? If I'm looking to trade this on a higher time frame, what we're going to do is we're going to be looking for these time frames to line up, because you're going to get pulled back. And we talk about it with the indices. We talk about it. So, you know, when you see, and so it's going to be great. You know, the pullback will be great. We don't want anybody to get in the habit of blowing any accounts or doing anything like that, right? We want you to trade with perfection. We want you to understand what you're doing. So what I'm looking for is I'm looking for confluence. I'm looking for my time frames to line up. So if I know what I look for first is my stochastic. So if I know that on this first time frame, on this hour time frame, is going into a buy, then on a 4-hour time frame, I need it to be going into a buy. On a 30-minute time frame, I need it to be showing me that it's in a buy. That's how I buy this. You know, I'm quite sure all of these don't match up. What I don't want to do is have a stochastic around the 80 and then come back here and have it around the 20. That means that they're doing two different things. So remember, everything happens on the lower time frames first. So if I'm looking for something that happens on a 4 hour, it started feeding it all the way from the 1 minute, right? So everything happens on the lower time frame first. So if I know that I'm in a nice buy, right? And this is at the top where it should be prepping for a sale, what that tells me is in a correction. It's in a market pullback in a correction. I don't want to enter a trade there. I don't want to enter a trade. That's not what I'm looking to do. So what we're going to do next Tuesday, because these Tuesdays is our training nights. What we're going to do next Tuesday is kind of identify, now that we know the support and resistance lines, we know what the cash out is. So we're going to identify, how do I look for that trade? I got my 30-minute, my hour, and my 4 hour lining up the same way. And when they're lining up the same way, I can actually take a trade. I can set a trade. So I'm not sitting here watching the charts. I could set a trade, and then I could ride it to that take profit, that support and resistance. And if I don't want to get caught in any pullback, I want to pull out at take profit 1. But understand that if I go for a take profit 2 or 3, 9 times out of 10, you're going to get caught in a market correction. And you want to make sure that you can understand and you can withhold that market correction. You could withhold that. So I'm going to ask questions, comments, but Mr. Rogers, you have any comments? Because it's just about, it's almost time to transition this call. So I just want to make sure.
Yeah, I just want to get, once again, let's celebrate our trade whisperer, Ms. Tasha and Dyer. If this was effective for you at all, and if you have a couple of questions, definitely want to put a 555 in the chat if this was helpful for you. Thank you. I know we had a couple of questions before we begin to transition. And folks, once you begin to understand to know what the roadsides are saying, when I say that, and for those of you who've been with us for the last couple of days on the US 30, we know and realize that the US 30 has been in the same range. We've been able to make that call when our buy stop has been right around the 25,844 range, and it's gotten all the way up to 20, as high as 29,1115. So for the last 2 days, if you've been with us, you can look at and go back and draw out those charts. Even for those of you who have been able to take profit, you can go back and see those lines, and that's how we've been able to still confuse on the PSAR. The PSAR operates as your support and resistance line. So if it's a sell, the PSAR, it will be at the top, acting as your resistance line. And if it's at the bottom, the PSAR is operating or acting like your support line. That's all that represents. It's a stop and reverse. It's just letting you know that if it is a buy and the trend is getting ready to go in the opposite direction, then that PSAR now is going to be at the top. And if it's getting ready to go into a buy position, then that PSAR will go to the bottom. So it's just like it's flip-flop, and that's why we say the PSAR flips in reverse. That's how you're doing that. Any other questions before we get ready to transition to a talk with the finance doctor? Any other questions, any other comment?
One thing I'll add to that, Mr. Rogers, basically
go ahead.
What you're saying is, if you just imagine like that PSAR is pushing down on a candle or is pushing up on a candle, just to help bring clarity, from a simplicity standpoint, just imagine this PSAR, when it flips, it's like it's bringing pressure. It's pushing down on a sell. If it's at the bottom, it's pushing up on a candle. So it's like a force. So it's a reversal in the market. It's that that moving. That's moving support and resistance with it. So just imagine a PSAR is an additional support and it's pushing the candle. So that should be able to help understand what it is. So it's just when the PSAR flips, right? We see it's here, it touched and it flipped. Just imagine it's pushing down on the candle to help push it into the sell. And when it got here and it flipped, now it's pushing up on the candle to push it into a buy. So I just wanted to add that. So, Mr. Robinson.
Fantastic. Once again, hey, if this has been beneficial to you as well, we need you to do us a favor. Simply in the IML Web Analyzer on Facebook, in the Facebook group, hashtag BYOB Cash Out. You know, invite a friend. Come out and catch some pips with us together. How about getting on IML TV? Hey, we need you to help us do that. That's why it's so important for you to go into the IML Web Analyzer group, hashtag BYOB Cash Out, so that we can create the value necessary so that everyone can benefit from this trading strategy. Yes, there will be a recording. You know, everything that we do, we record it. You go to our BYOB Challenge YouTube channel, and you'll get an opportunity to experience all of this information. So with that being said, folks, once again, if this has been helpful for you, if it's been beneficial to, if things are beginning to make more sense to you since you've been participating with us, give us a 555 in the chat. Give us a 555 in the chat. Secondly, if you've been with us for the last couple of weeks and you've been able to increase your personal account because of what you've been able to do with our 5 a.m. and our 9 a.m. calls, give me a 777 in the chat. If you've been able to benefit and increase and be in profit, yes, we're excited about that. Thank you, thank you, thank you, thank you. Yeah, we're a family. We want to all make sure we eat together. We don't want to leave anyone behind. Yes, we appreciate that. Once again, make sure you go to the IML Web Analyzer group, hashtag BYOB Cash Out, and we want to make sure that. So with that being said, folks, we're going to transition. Once again, we want to give a big shout out to the trade whisperer, Ms. Tasha M. Dyer. We thank God for her being able to utilize a minor skill set to be able to teach a strategy that's simple, that we can all have above average results. We tremendously appreciate you for that. So, folks, tonight I get the honor and pleasure to share with you as we begin to transition this call. The gentleman that I'm about to introduce to you now is a gentleman that I have